And we are live. I'm coming to you from the beautiful coast of Italia. We have a wonderful show here lined up. Sir David Porter will be joining us shortly as well. We have a great segment from the great Matt Dixon, and really just a lot going on in the world as we move forward. The markets are bleeding. We have a little bit, that's one way of saying it. You could also say it's consolidating. It is the normal way, and that is what's happening. We have a bit of a consolidation going on. Bitcoin is up actually slightly, but the rest of the market is pretty much bleeding down. And this is across Asian stock markets as well as gold, silver, everything. Now, this is after a lot of gains that they've had here recently. So really nothing to be unexpected. It's something that we've talked about quite a bit over the time. How are you, David?
I'm fantastic. Working it, and everything's okay. Lovely. I'm in the lovely city of Galway here in Ireland. Pretty cool on the westernmost coast, and checking out the markets now. How are you, Bruce?
Doing great. Doing the thing here. I will be in Paris next week, of course, covering Paris Blockchain Week. Been going back and forth with them as well. We'll be broadcasting the show live from Paris, so that should be a lot of fun for everybody. And we're gonna have a lot of great interviews as well. So really looking forward to that. Some news, fresh off of the press here, and I think just so that I don't have a feedback, I'm going to try to enter from my phone. Am I loud, or do you hear a lot of noise behind you, David?
We hear a little bit of chatter, but we hear you clearly.
Okay, well then I could not worry about it, or I could do this.
I guess there is quite a bit of chatter.
Now can you hear me better?
Yeah, now you're louder, but there's a feedback.
The background is less?
Yeah, that's better.
Perfect. All right, so we're live. So that's going to be pretty fun next week. This week coming up, of course, we are finishing our long run here so far on the Smart Money Culture Network, Smart Money Culture TV Network. Fly Mackey, the man with the plan. And let me just make sure our feed is going well over there. I know he asked me yesterday. Of course, we had a little bit of technical difficulties as we were pushing things forward. And we're looking good there. Okay, perfect. So a lot going on today. As I mentioned, there's a lot of news going on. You have Janet Yellen coming out. She says we are basically in bed with China, and that's it. And of course, the news headline is that U.S. and China is blah, 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 blah. And it's not the U.S. and China, okay? It's the central banking cartel and China. And China's central banking cartel. It's the same cartel, okay? Really, just slight differences there. But that's what's going on there. And of course, you have basically the same cabal pushing as well. You have Blinken going around and really just making a mess. They're making a mess over there in both of those countries, in both of those regions. You have Eastern Europe, where we're funding these never-ending wars. Ukraine has no chance. They have no chance whatsoever of winning this war. And you have Israel, who, to be honest with you guys, hate to say it, really has no chance of winning war against everybody. They're basically against everybody over there. And we need to get all back to the tables and start talking to each other. Israel bombing, I think, positions inside Iran. And Iran has the capability to completely wipe Israel off the face of the map, to be totally frank. And you could argue that Israel probably does too, but that's not the way we want to go, guys. Everybody wants the same thing. People want the same things. They want to have a family. They want to have prosperity. and they want to leave a nice, safe place for the future generations. So it's really important that as Americans, that we push that, and we push that, and we push back on the global, the banking cartel that is running our countries, and really try to fix that. We really have to end the Fed. I know I talk about it all the time, and we on and on and on until people really understand, because that is why the war is raging. We have been at war. The Federal Reserve started in 1913, okay, and we have been at war since 1914, basically, with very small intermissions there. We've had some, but basically we've been at war since then. And here's the part that people need to understand. We will be at war until we close the central bank, because the central bank is operating above the U.S. Constitution. It's operating above the government. It's operating above, okay? And so they are able to make all types of decisions, whatever they want to do, and fund whatever they want. And we have a kind of a ceremonial vote in Congress, but it doesn't really matter. It doesn't really matter. So some of the other stuff going on today, I mean, there is quite a bit. Blinken has come out and he says that Ukraine will join NATO. Of course, Russia has continuously said that if that happens, you know, that's kind of a line in the sand, as they say. Elon says this is literally how the nuclear apocalyptic movie starts, right there. And David Sachs says World War III, as I am saying right now. If that is to happen, if Ukraine joins NATO, we are certainly in World War III. We're probably already in World War III as it is right now. Israel has opened up a bit of aid, supposedly, into the Gaza region. It's supposed to be rapid after a call from Biden yesterday. Of course, there is a humanitarian disaster going on over there. Tens of thousands of people are dead. And it's one of the things, of course, Trump came out and he did an interview yesterday. He goes, it's fine. Look, I'm not saying that I would have responded differently than what you did. But, okay, now you responded. You got to finish up your war, okay? And that's really where we're at, because you got to stop the war. You can't be at this continuous war that's going on. Of course, I think that, God willing, Trump will get in. I think it's the best thing for the world. But I worry that he's really going to be able to do much once he gets in, because I think that, and I've said it a number of times, I think that they've already planned that he will win. Because if he doesn't win, I think that the chance for civil war or large unrest in the United States is very high. Actually, if he wins, it's the same thing. But that side will feel, like they really have the upper hand, because obviously he has the will of the people. It's very obvious he has the will of the people. So if he is not allowed to win, and then when I say allowed, they have the magic electronic voting machines, they have the absentee ballots, and now they have at least, as Tucker told us the other day, 22 million more people that they're trying to empower to vote. Many of them are going to vote. The largest margin that someone has ever won an election in the U.S. is 17 million. So you can do the math there, 22 million. And that's just the illegals that have come in since Biden. It doesn't include all the ones that Obama brought in before, and as well, although Trump did slow it down, all the ones that, of course, came in when Trump was president. So I think we're getting more and more to a place where, and I say it all the time now, do you guys really think that we can vote our way out of this? And that is something that I say multiple times. Do you guys really think we can vote our way out of this? And, well, we're going to find out really soon. Russia says that U.S. journalists are spies. Of course, we kind of already know that. Basically, the mainstream media is run by the CIA. That is very obvious. Whistleblower claims that Israel is already using an AI system with no human oversight to decide who to bomb in Gaza. This is something I've talked about multiple times. And when you see these reports that come out saying that this is the future and soon we are going to be using these technologies and they're going to be deciding who to kill and who not to kill, it's just going to be AI. It's not even going to be any humans. It's already happening. And I called it as soon as those reports started coming out. So guys, this is already happening. And so information on that is already starting to leak out. Now it's an interesting news report because of course they could just be trying to cover for themselves as well. Okay, because there's a lot that's been going on there, and we see what's going on more over in that region. We don't get to see what's going on so much in Russia and Ukraine. I'm sure there's a lot of that stuff as well that's going on, but of course, what you don't know, you don't know, right? So if we don't know it, obviously we can't talk about it. So I would be talking about it though if I knew about it happening over there. But you have two countries that are they really kind of, I feel like both don't really want all that information getting out. And in Israel, it's a bit of a different story. But this whistleblower claims that Israel is already using this AI system with no human oversight, and it decides who to bomb in Gaza. And obviously, also rumor has it that Gemini, Google's Gemini, may be the one that is helping out with that. So that's pretty interesting. Diddy, of course, is still doing his stuff. NATO is having a bit of problems, and of course, the markets, as you know, are kind of in a meltdown. As I said, oil is now above 86. It actually just turned green as we started the show. I'm going to share my screen here because oil is now really climbing, and that is something that you can just take to the bank. That is going to raise inflation a lot. It's going to raise inflation a lot, okay? And when you see oil above $80, then that is really something else here. So there you have 86.78. It actually just ticked green as we were here on the show. And I'll kind of pop around here on my shared tab. The Hong Kong Stock Exchange, as I mentioned, these are red. Hong Kong Stock Exchange has been red now for a few days, so it's actually tepid. It looks like really tepid kind of today, just about even. But it has been this week has been down as that moves along. So Dow futures are up slightly. Futures. As I was leading into the show, we'll look at that up slightly. Probably signals that we'll have an up day today. Of course, it has been having a bit of a rough go. I'm not sure what I hit here. Let's just see where we closed yesterday. Gold's down slightly. The Dow closed down yesterday, but down over 1%, 530 points. So looks like it will regain some ground today if the Dow futures are a good indicator, which normally they are. Gold futures prices, we actually just clicked up. How about that? So gold is just pushed up, of course, $2,300, $2,312. This had just gone down to about $2,000. Oh, was it weeks ago, huh, David? We were at $2,000 for gold.
Yeah, it's great to see it. I believe that many of the crypto profiters are moving into the stability of gold, and it's paying off, going up quite a bit.
Silver down slightly, about 1%. But that gold, gold, there's no truer hedge. Crypto, you might go up a lot and you might go down a lot. Okay, and that's the way it is. But gold is the ultimate hedge against inflation. You can buy gold at cost. You can go to @costmetals.club. That should forward you to our referral link, which is clubs with an S. But if that doesn't work, just go to @costmetals.com and you use the referral code clubs to get in there. And actually, every time we talk about it, David, we have people sign up. And so we have a decent amount of people there. And once I get back into the States after Paris, we're going to really start talking to people. That is a very exciting company that's going on there. You can buy gold, silver, palladium, platinum at cost. At cost.
Yes, at cost. The prices are there. We've had experts and regular metal buyers, coin buyers, looking at the prices, and they agreed they would save 10%, sometimes up to 20% using at cost metals. .com.
cost.
Yep.
At
So
cost is at cost, as they say. So yeah, keep an eye on that. I mean, I'll tell you what, at $2,000, I was saying that we could have a 50% move here very easily, and here we are at 2,300. 50% move, of course, at 2,000 would be $3,000 an ounce of per gold. So I think that we'll be there at $3,000 very soon. And the big reason for that, of course, guys, is that they are diluting your money so much. They are diluting your money so much. It's like, it's actually, and just to talk about it, and then I'm going to bring in Matt and play his segment, but it is highway robbery, guys. It is absolutely unbelievable what they're doing to us. I'm over here visiting my family, my wife's family in Italy. We have the Bisnona, all right, the great grandma. She's 95 years old, 95, 96, like that. And we actually, I can even just pan around here. There she is talking away over there. I don't know how well you can see her. We're here on the beach.
nice. There you go. That's a nice office there for the day.
It does not suck. But I'm here and I'm like looking at this, and of course we have my father-in-law and everything else, and it's the old country here, and so like money is different. In the U.S. we believe anything is possible. It's like something that's ingrained in us, right? Everything is possible, and here it's a little different, and it's a bit of and it's not just Italy, it's Europe in general, but it is highway robbery, what we do when people pass away. And I talked about it a little bit yesterday, the day before as well, about why a corpse is called a corpse. And it's because it's a dead corporation. And so when you are born and when you make your birth certificate, they're starting a corporation for you, and that corporation is openly traded and they're issuing bonds. It's really a sick business. And then when you die, they tax the mess out of you, and they take almost everything. I mean, you're not allowed to leave. You're not allowed to leave that much to your kids, to your family. It's like unbelievable. And there are certain ways that you can get by it, and there's tricks that you can play, but you have to be pretty savvy to figure this out. And so for the most people, it is an absolute. It's horrible. It's horrible what we have allowed to happen. And I don't want to allow it to happen anymore, David. I want to stop the central banking cartel.
Yeah, basically you're dedicating your property, your vehicles, and everything. You're dedicating it to the government, to the state, to your country, and not to your family.
It's absolute, yes, and that's right. And people don't realize it, and we're here to tell you about it, because this has got to stop. This is not going to fly with the Porter brothers at the helm. Okay, they're letting us on TV. We're on TV, they took on the smart money culture. What's that?
When they took over the education system, they slowly began to do paperwork in a structure that benefits them and actually hurts you by these large margins, to the point where they own everything that you pay for. And if you learn, there's places to learn how to do the correct format of paperwork where you can be the sole owner of your private property and your sole owner of your motor vehicle.
It's crazy. Well, and that's the other part that you start to, when you're in the business like David and I are, as long as we are, you start to realize everything is run by a corporation anyway. It's all corporations. You think that the police department is something else. It's government, but it's actually a corporation. It's a corporation. They have to make money. Yep. They have to re-register. It's a private corporation.
For profit.
For profit. So really interesting. So on that note, we'll talk a little bit more about the markets. Matt Dixon has set up an absolutely wonderful segment for us here. I'm going to play it, and it is really something else. The great Matt Dixon.
Good morning, David. Morning, Bruce, and morning, Impact Money. It's a real pleasure to be with you today to present a little bit more about eBay Ratings, the upgraded eBay Ratings platform. So I'll give you a little bit of a tour today. Again, I'm just planning to do a little bit each day to try to give you an insight into what we're doing, how it can help you, how to use it. So we're actually today also, and the reason I can't be on live today on the show is we're going live with a company, a platform called Threeverse. They're an amazing platform that offer access to multiple exchanges with one KYC. It means you can actually arbitrage between different platforms. Just with one KYC, you can look at different pricing that's available, but there's all sorts of other services. And they're partnering with eBay to offer the eBay ratings to their 3 million active community. And that's 3 million growing rapidly. So this is a major breakthrough for eBay, but it's also a major opportunity for all the Three-verse users and community to benefit from the ratings that we offer. So the eBay platform, this is a landing page, and basically it's a platform, a ratings platform, an unbiased ratings platform that's powered by AI and machine learning, particularly artificial intelligence, which is the buzzword for this year, of course. So basically, it was formed or created out of the ashes of the 2008 financial crisis, where the worldwide crash was caused by a failure of ratings agencies. The ratings agencies were allegedly biased at the time, being paid to produce ratings, particular ratings, by some of the big institutions. And so we wanted to create a system which was completely unbiased, which is why we built it on artificial intelligence. So there's no human bias here whatsoever. So here's a little look. You can see very briefly a little look about the eBay ratings, a snapshot there. There's a whole range of ratings based on the normal traditional credit rating agencies. Now, we're not credit rating, we are financial rating, but we've adopted the same sort of ratings terminology. So for example, a AAA rated asset is the highest rated asset, and it goes down AAA, AA, single A, triple B, double B, and so on. So you can see that basically, obviously, you're looking at the higher rated assets. They tend to be lower risk and lower volatility, but a bit more safe. And then you can go for the lower rated assets, which sometimes there's some real opportunities there. They're obviously higher risk, higher volatility, but sometimes some real opportunities. And then what's really important is the movement between these ratings, between the different ratings levels. And if we see a big upgrade or downgrade, it usually tells us that something's afoot within that particular asset. And then what we've done, what we've built on, and we actually won an international hackathon based on this technology. We're using what's called efficient frontier technology, and this is part of modern portfolio theory. It's built on Nobel Prize winning research. In fact, all portfolio building technology, or I should say nearly all or most portfolio building technology worldwide with traditional assets, is based in some way on modern portfolio theory, and particularly on diversification. So you don't want to hold one particular asset. This is what the indices are all about. You know, you can have a look at the Dow or the S&P. You'll see that there are many different participants within that particular index, many different shares or stocks within the index. And the same goes for cryptocurrencies. There are 20,000, maybe even many more now, cryptocurrencies in the marketplace. It's not sensible even just to hold one particular asset. Even Bitcoin, although Bitcoin is obviously an amazing asset, it now has that ETF approval, and we now have real institutional adoption within Bitcoin. But cryptocurrency is all about cutting edge technology and about opportunities. And again, there's a whole range of opportunities. Probably Ethereum will be the next one to get ETF approval, and maybe more after that. So these opportunities, as they come to fruition, mean there's potential to make profit and to trade these assets, both to the upside and the downside. So the efficient frontier, what it does, it actually tells you the mix of assets that you need to hold at any particular time to give you the maximum possible risk-adjusted returns. So this is theory, investment theory at its very best. It's not about gambling to choose a particular asset, and maybe it might be the right one, might not be. It's about building sensible, grown-up, proper portfolios that actually mitigate risk and give you the best returns possible for a certain level of risk. So as we go through this, there's a whole range, and we'll click onto the platform, I think, just to show you how this is actually used. There are 4 different frontiers that you can use. We have the prime spot, we have the pro spot, then there's futures products as well. So we'll actually look at those as we go into the platform itself. So I just click onto view ratings, and this will show you the actual ratings themselves as they would appear when you first click in. And so you can see, for example, just first look at today, you can see the ratings are pretty much zeros mainly, and the movements are minimal. So one rating movement down there for Polkadot, one movement down for Near Protocol, and then we have an up movement for ICP, Internet Computer, and also a movement up for Chainlink. So this tells me, and again, we can interpret this in many different ways. As you get into the platform and learn how to use it and drill down, you'll develop your own techniques for trading. But it is a really powerful tool that I find very helpful. So we can see, first of all, that the AAA rated, so for example, Bitcoin is a AAA rated asset today. Ethereum is a lower, it's double C. Binance Coin is AAA, and so on. So this is the rating. And then the number on the right, if it's 0, it means there's been no change in the last hour. So this is looking at the hourly changes on the ratings. And the only ones we've seen movement, as I say, Polkadot, Near, ICP, and Chainlink for the moment. So as I say, what I would gather from this, first of all, is that there's not a lot of change in the market. The market is probably in a bit of a consolidation phase. We had a big move up in the market. We had a bit of a move down following those strong numbers that came out of America. And we've got the employment figures today, of course, so we'll be watching that very carefully. But the market has come down a bit. It's now consolidating, and it's consolidating really probably waiting for this employment news, the non-farm payrolls that are due to come out of America today. So the market is pretty much on hold, which is why we're seeing pretty much a flat market here, consolidating market. But these are the markets where opportunities really abound. And what I tend to do when I'm looking at this kind of thing is I'm seeing a flat market, so I'm looking for particular opportunities. So we can go into the sort, or we can go into filter, and we touched on those briefly yesterday. I'm going to click on one where I sorted looking at the volumes before, and I identified that XRP, and I'll go into in-depth analysis on XRP here. And we can see straight away that there's massive trading volume, a massive increase in trading volume in the last 24 hours. Now that is surprising, bearing in mind we've seen a bit of a downturn in the crypto market, and yet we're seeing a massive pump in volume. And it's not necessarily sell volume. This is telling me that possibly some of the big players, perhaps the whales, possibly even institutions, are weighing into and basically buying the dip on XRP. So it's telling me that potentially with all this volume coming in, and yet we're not seeing price, if we looked at that on a chart, we'd actually see effectively some kind of divergence telling us that the price is probably going to push towards the upside. That's the likely scenario here. So again, you can use this with traditional TA tools. And as I say, I use divergence as a really good leading indicator. And this is telling me this massive pump in volume, 40% increase in volume with the price staying low, tells me there's some interest going on behind the scenes. So that's one of particular interest to me today that I would look at. There's many others that you can look at, and we can sort by, it's great to look at the volumes. So we can look at the high volume tokens. We can look at the ones with low volume. So you might see some that have an upgrade in ratings, but you would want to look at the internal information. So we can see here, Flexcoin, for example, in the last 24 hours had a 57% pump in price, but no change in rating. And so you wouldn't necessarily jump straight into it. What we would do is do an in-depth analysis here. So I click on in-depth analysis for that particular asset, and I would look at the volume. Now, the 24-hour volume for Flex is $1.24. So you can see basically, despite the positive information, you might have been led astray if you didn't have access to this sort of information. But you, even though it had that massive gain, it probably wouldn't be wise to follow it, because 24-hour volume of $1.24 tells us that there is effectively no volume in this asset. The spreads are going to be massive. The slippage is going to be absolutely enormous. And so it's a very, very dangerous token. So even if you like it for other reasons, it would probably be one that you'd only put a very, very small amount. Just dip your toes, a very small amount of capital that you can basically leave. Not worry if it's lost, it's not a problem. That's the sort of thing that you'd think in this situation. So I'm just showing you a few ways in which you might want to use the platform. And we saw there, by the way, where was it? Lower down anyway, we saw the link with Three-verse. So that's the, if we go back onto some of the big tokens, let me just go to the landing page here. Just flipping around again. So if we were to click on Bitcoin, for example, we can see here the link to Three-verse. And as I say, Three-verse is going to be one of our first big institutional partners. As I say, they have 3 million active users, but you can click on there, go into the Three-verse platform and access any of the exchanges via one KYC. That's really helpful because honestly, doing KYC for different exchanges is quite a problem, quite a bind. But the fact you can do that, and it actually enables you to arbitrage between different platforms. So you can actually see differential pricing across different assets and take advantage of that. So anyway, there's loads more we can do and go into with the with our platform, with the eVay platform. But today I will just jump back to the assets that we tend to focus on, just to look at where things are going. So we're still seeing some positive momentum here on Litecoin. And I think that it looks as though we haven't yet reached the target that we were looking for. So we've got potentially an ABC down. Maybe we're beginning to push higher. This looks positive. This candle was some kind of doji candle telling us undecided. We're beginning positively. Let's hope we get some follow through today because it looks as though we could get higher. So with non-farm payrolls due out today, that is going to be really key. If we see the figures being roughly met according to expectation, then I think it'll be a real big positive to the market because the market is currently very jittery because of worries about the market overheating. I suspect we're going to get some good stable figures today, which could give the market a little pump to the upside and will potentially give us that pump we want to see here on Litecoin to complete this particular move to the upside that we got from this triangle. We got the break from the triangle, which we expect it to go in a form of A, B, and C, or it actually be probably W, X, and Y to the upside. And then we'd expect a correction again, sharp correction probably to the downside. So short term, I think upside is on the cards. So let's just flip through to SPX, the S&P 500. Again, we got quite a bit of a pullback following that news that we got the strong news the other day on manufacturing, and we got a bit of a pullback there. The reason for that, as we said yesterday, was it meant that interest rates are probably going to have to stay higher for longer, and maybe they won't be able to do that June rate cut that the Fed were talking about. Maybe that will be delayed. And so the market don't like that. The market actually like easy monetary policy, where there's a lot of money flowing around in the system, which can flow into these risk assets. So that was a potential negative, but I do think that probably we'll see some positive news on the employment front today, which could give us that push higher. And you can see I've got a target overhead where I'm thinking that we could easily reach the 5379. Maybe not today, but maybe over the next few days after the weekend, perhaps. Expecting a further push to the upside before a potential correction to the downside. So SPX is telling us that most likely this was a correction, and I think we do have, especially if based on employment numbers today, if they're going to be good for the market, then we could get some good upside there. So looking at gold, we're seeing gold looking really good actually at the minute, but we need to see this candle finish. So this is pretty much what's called a hammer candlestick with a long tail or shadow below and a small body on the upside. If this were to turn to a green body, that would be even more bullish. So this is actually telling us that the market is bullish for gold. So gold is continuing to be bullish. And if we looked at that long term, this is just looking at well, it is actually looking at daily, so it's relatively long term, but we would probably be able to see this was a wave 4. After wave 4, we expect a wave 5 to the upside. And I think there's probably still some way to go towards the upside. And even that is only on a larger fractal wave 3. We'd still expect a pullback, but then more movement to the upside. So I actually think that gold is still looking really healthy. And whilst normally I don't like chasing highs on a particular asset, and gold is at or near all-time high at the moment, I do think that there's still major opportunity here because inflation is a worry in the US. So gold is an asset to really watch. Bitcoin, we actually highlighted yesterday, and I highlighted a lot on my X account, saying I expected a positive move as of yesterday, and we got that. We can actually see yesterday's candle, which was a big green candle. Just expand it out. This red one is today's candle. It's a bit of a pullback so far today, but that green candle, we anticipated it before the move happened. The price of Bitcoin was around 65,000 at the time. It pumped to over 67,000. It's still over 67 right now. So it actually pumped to 69,000, sorry, virtually 69,000 yesterday. So that was a big move yesterday in percentage terms. And that was anticipated, again, because of the wave structure. We anticipated the upside. I think this is most probably just an early pullback today. And as I say, I'm anticipating some numbers from some employment numbers, NFP numbers, that will be well received by the market. So I actually think that we'll probably see some upside on all of the risk assets. And here, Bitcoin, as I say, I think that this red candle will probably push and end up as a green candle. I think the market is still, this is only a correction to the downside. Even if the correction were to go deeper, I still see it all as just a correction. The main impulsive direction, which is actually the direction of the trend, is still to the upside. So even if we do see a little bit more pullback, I think we've still got more highs to come. New all-time highs still to come on Bitcoin, I believe. So oil has been one very much in the spotlight at the moment. There's still a lot of concerns around the Middle East, and there's actually some reports come out. These are kind of not widely circulated at the moment, but Iran is planning through its proxies around Israel, it's planning a more concerted, more concerted intervention. I don't know quite what you call it, but basically coordinated action against Israel. And so if that were to happen, we'll only see oil price continue to go higher. So we were talking about it when it's below $80 and saying it's looking constructive. We broke above $80 briefly, and we tested back down below to support here. We can see support was around about here, and then we just continue to break to the upside. There's nothing looks as though that's going to stop at the moment. So oil is continuing higher, which is probably not a good sign for inflation. So if oil is going higher, it possibly means that there are two sides to it. Obviously, there's supply and demand. So if we see geopolitical issues in the Middle East, and that is a supply issue, potentially that will be a supply interruption. But also the other side of the equation is the demand situation. And if the US economy is still hot and potentially even overheating in some ways, yes, it's got the problems of debt. So as we explained yesterday, Fed are walking a tightrope, but they've got two problems. They can't deal with both at once. But the first one they will want to deal with is inflation, and inflation appears to be on the pickup. And if the oil price is picking up, that will mean that manufacturing is more expensive, transport is more expensive, heating is more expensive. Basically, everything we do in life is more expensive. Even transport of food is more expensive. And so that would mean that inflation, the prices of everything, has to elevate. It means inflation goes higher, which means interest rates have to be increased. And when they increase interest rates, it then again means that the cost of everything goes up for everybody, and it means there's less money available for risk assets. So this is not a good situation. It hasn't yet got to a bad situation, but right now, warning lights are flashing. The warning signs are there, and we need to very much be aware of them. So looking at Solana, we have had a really solid pullback, and it may be that that was probably not a wave one up. It may have been just we had A down, B up, and expecting C down to finish wave four. So wave four, we just move over here. And you have to be sort of adaptive in your analysis and be adaptive to the market. When you get a correction, you're never quite sure whether a correction is complete or whether it's part of a larger correction. So for the time being, it looks as though we're probably heading a little bit lower. But as I say, I think it's just nervousness ahead of the employment figures due out a little bit later today out of the US. So these are early doors. Let's just see. I think the US employment figures, NFP figures, are going to probably give us a positive surprise on the risk assets to the upside. So that's Solana we've seen, and we can just look at a couple of the others. There's obviously some of the meme coins. SHIB is down 4%. Aptos, actually a layer one. It's not a meme coin. It's a layer one. Is down substantially today, down 9%. Litecoin is still the positive one. That's still looking positive despite the big downsides in the market. Gold, as we saw, is flat at the moment. Bitcoin is down a bit. Bonk is one of those meme coins, down quite a bit. So the high risk ones, Book of Memes as well, down nearly 10%, 9.6%. So the meme coins, as Bruce and David were saying the other day, are basically like as though they're already on leverage. They're effectively cryptos on steroids. They're high risk because they don't have particular use cases all the time behind them, even though some of them do develop use cases. Initially, they come out as basically just a meme coin and nothing much behind them. And so they tend to be a lot more volatile than everything else. So if you're trading meme coins, I would strongly suggest you don't touch leverage because they're already crazily volatile. And even some of the other assets here, we see, well, eBay's down 1% today, 1.4%. It's actually one of the better performers of the day, even though it's down. Injective is another AI token, down 4%. ICP, pretty big loser at the moment, down 5%. So again, I'm expecting turnarounds in a lot of these tokens. So it often happens, especially when there's news coming out of America. The market is actually quite nervous ahead of this news. And so there's a real potential here. If you're positioned right, do watch your risk reward ratios. If you take your positions, just make sure you're well protected to the downside, that you don't, you're not overexposed to the downside, but you do have opportunity for substantial upside. So these are the times that I'll look, but you must watch that risk reward. In other words, have a protection, because if the news were to surprise and we got really strong employment numbers out of the US, that would be even more ammunition to those who say we should be getting a rate rise. That would be negative for risk assets. So in actual fact, we just want pretty much more of the same out of the NFP figures. We don't want any big surprises, upside or downside, really. So let's hope that's what we get. So we can talk and talk. There's so much opportunity within all these assets. There's so much more to talk about with the eBay ratings. But I hope that's enough for today. It's a wrap for today. I'm sure there's plenty for you to talk about with what's going on in the world politics and America politics. So thank you so much for listening today. It's been a real pleasure, and have a great weekend, and look forward to catching up next week.
I can't hear you. Not sure if you can hear us.
Really? Can you hear me now?
Yes.
Okay. I think everyone can hear me except you.
Okay.
I don't know. Anyway, another great, wonderful report by the great Matt Dixon there. Of course, he put that one together for us, that eBay platform. We're going to continue to work with that, trade with that. So we're putting together as well. We've historically worked very closely with eBay and Matt, and are looking forward to that continuing as they put together this fund structure. You could even say we put together this fund structure that is going to propel things really into it. When you're investing, a lot of times it makes sense to have a basket of different assets, and that's exactly what they're doing. So always a pleasure to have him on the show here. I'll tell you what, it is something else though, with everything that's going on. I don't think that people are really ready for the inflation that is about to hit them. I think that's really going to be a big, that's going to be a big shock to everybody.
Yeah, we saw from a few years back in Venezuela the inflation shock, and they were literally just throwing paper money into the garbage because it wasn't worth anything. It took millions and millions of paper bills to to buy a gallon of milk or like $10 worth of stuff, and it was absolutely worthless.
And this is what I'm telling everybody for a decade now, but now people are really starting to get it, David. They're starting to get it. We're starting to get through to people. Hats off to Smart Money Culture TV and our main man Fly Mackey for putting us on TV, because that has really made a big difference here as we get this word out. Guys, let me tell you, the last place you want to be is in paper money, okay? The last place. And at current, I understand what you need to be in dollars to pay the bills and this and that and the other. Hopefully you're making enough money where you have some excess. You can put it in gold, you can put it in silver, you can put it in assets like Bitcoin, Litecoin, and other assets that might move up. Global Boost, I think, is a good one. And they obviously is a good one. We're not financial advisors. We're not giving financial advice, okay? This is all for entertainment purposes.
Yes.
But that is, this is really, really important for people because, as we were just talking about, looking at my kids, Biz Nona over here, 95 years old, and looking at, as, our parents, even David, get older, you're basically just a corporation, and they want to basically take all the money away from you when you die. They don't want you to have a legacy for your kids. And, the big guys over here in England, the royals and stuff, they get to leave everything. They don't get this 50% death tax.
No, they're sovereign.
Yeah. They don't have to.
Sovereign from this government structure.
Yeah. So that's, and we'll be talking more about that as we move forward. There are certain ways that you can get around that. There's some of the ways like David's talking about. There's other ways as well. You can put your assets into different types of trusts. You can even put your home in a trust and not have to pay taxes on it. So that's something I'm very interested in. It's something I've complained quite a bit about. I have to pay $2,000 per month to live in my own house, and it's something that's really paid for free and clear. And I have to pay $2,000 a month to live in my own house. Unbelievable. It's unbelievable. And if I don't pay it, they take my house that's already paid for. Unbelievable. It is unbelievable.
This is theft. This is absolutely theft.
It's theft. And we're at a point in the history of the country and the history of the world where if we don't fix it, we're at a tipping point. And I've been saying it for over a decade now. So, I mean, I know maybe I sound like a broken record, but now we're even, things don't happen overnight, okay? And now we're really at this tipping point where, things are, I mean, how much more can you be taxed? So, and because here's the thing, right? Last year they spent $6 trillion. The U.S. Treasury spent $6 trillion. They collected 1.5 trillion. These are round numbers, okay? It's like 1.6 actually, and it's 6.2 or 6.1. But just for conversation's sake, you can look it up. It's all public figures. They collected. They are collecting 1.5 trillion, which just happens, haha, to be the amount of service, the amount of interest that is accrued for the year of the $34 trillion in debt that the central bank has fronted us. If the central bank wasn't there, this cartel, to front all the money, then the government wouldn't be able to spend it, or the cartel wouldn't be able to spend it, because they'd have to come to you and say, hey, we need another $4,000. And you would say, another $4,000? I don't have another $4,000 to give you. But because they have the central banking cartel that just spends the money, then they figure out how they're going to tax you, and then they take it, of course, via the inflation tax as well. So last year, the Treasury spent $6 trillion. They collected $1.5 trillion. Okay, in income tax, that means there's $4.5 trillion that they have to make up from inflation, and that's why inflation has been going through the roof. And every time you go to buy something, you can't believe it. That's why. And it's going to get a lot worse now. They're passing these new bills. And as far as my calculations look, it looks to me that we're on track to spend almost double. We spent about $6 trillion, to be perfectly clear, over the last few years, 5 or 6 trillion. Even with Trump, we were spending way over what we should have been. And I understand once you get up there, you don't want to mess things up, right? You get up there, but we got to mess things up. We have to mess things up. We have to. Otherwise, we are not going to survive as a people. We're not going to have anything left to leave our kids. You guys realize that, right? There's going to be nothing. You're going to have nothing left to leave them. The last thing in the world you want to do, I mean, think about if you're like a person that's had $100,000 50 years ago. The last thing that you would want to do is leave that $100,000 in the bank.
Yeah, right.
Because it would be worth almost nothing now. $100,000 50 years ago is like $1 million. If you bought $100,000 worth of gold 50 years ago, you'd have more than $1 million.
Yeah.
The last place that you want to be right now is in fiat money, is in paper money. You need to get yourselves out of this central banking cartels fiat monetary system. It's being used to enslave you. It's being used to enslave your kids, and we've got to get out of it. It's also being used to fund these endless wars. And I know I come out kind of strong sometimes about it. I'm really just anti-war, period. You know, Dad went over, he got shot up. Grandpa went over, he got shot up. Actually, our family has been involved in every major war since the beginning of the United States. Now Italy, so this country sounds kind of funny. But since the beginning of the United States, our family has been involved in every major war, including the Revolutionary War. And we have to. When we started this country, there was no central bank. There was supposed to be no central bank. And we can go on and we've dropped truth bombs about how all that has happened. But we got to end it. We got to end the Fed.
Yeah. End the Fed. It's probably going to be trending soon again on X. It usually lasts for a short moment before they knock it off. But, man, you'll see it almost every day, every week. In the Fed is a major headline. And everybody's starting to understand with all the information that's come out.
We will never pay down the national debt as long as the central bank's in charge, because every dollar that they print, which is just paper money, it's nothing. You hold on to that for longer than 50 years, and I'll tell you, it'll be worth nothing. One day, your paper money will be worth nothing. This I can guarantee you. I guarantee you that one day, your paper money will be worth zero. Gold's
Yeah, these are
something.
debt notes. These are debt notes and
Debt
not
notes.
and not predatory notes. And even your banking system's operating on a debt system and not a credit system. So we need to make this transition into being creditors and not paying a debt on every dollar that you receive, or that you pay for is also into debt. Just further into debt. It's a negative system. We're going to change it.
We are going to change it. We're going to be talking about it every day until we do. We're coming to you live from around the world. You see how we do it, guys. Whether we're walking through the streets of some place, doing interviews, whether we're on location, as we'll be like next week at the Paris Blockchain Week, interviewing some of the leaders in this crypto space, in the space, whether we're in Dubai or these other places. Dubai was actually lining up pretty good, David, but then I forgot Ramadan's not over. So another couple of weeks. We've been there during Ramadan. It's fine. They're pretty easy, but it's when we go, we like to do. We like it to be we like everybody to be able to concentrate, and they like their time too. Let them have their time. So, well, amazing guys. We've got another great show, David. Next week, I think we will be shooting from Paris together. David and I will be together again for the first time in at least 6 months, right?
At least, yeah. I think last time we were there at Blockchain House Portugal.
Blockchain House Portugal. We'll probably be there as well. We might slip through there on my way back. We'll see. But pretty exciting stuff. But we'll be always doing the show same time. Of course, we're back on in 5 hours on your TV there in Texas and Louisiana. Signing off.
Cheers. Stay tuned to stay lucrative.
Your voice is powerful. When combined with social engagement, it's a force for change. Decentralized media paired with free speech is the catalyst for an empowered world and a unified, invaluable ecosystem. Join Global Boost, become a champion of free speech, and help to reshape the future of media.